Hello, I'm Christine Van Slyke with RE/MAX, here to give you the latest update on the market. This will be the last one for this year. This past week, the Fed raised rates 0.5%, and this was the 7th rate hike of the year. However, after 4 consecutive rate hikes of 0.75%, the Fed appears to be slowing down, and the rate hikes appear to be working. The Fed's objective, as you probably know, in raising the rates is to slow down spending and cool inflation. This past week, we got the latest inflation report, the CPI report for November, and the numbers showed inflation is coming down and the rate hikes are working. So what does this mean for rates in 2023? Mortgage rates are down about 1% over the past 5 weeks, and you can secure financing below 6%. Remember, it was above 7 at one point. As inflation subsides, we should continue to see a decline in rates, though don't expect the 2 to 3% rates we saw in 2021. Rates in the 5% range is more realistic. As for the Fed, they are likely to continue raising rates, but at a slower pace. We are likely looking at 0.25 rate hikes when they are next meeting in February, and perhaps one more 0.25 rate hike after that, and then a pause to let the economy adjust. As usual, it's a slower time of year, but as mentioned previously, Los Angeles is still a great market to invest in. Prices have come down, and you're not seeing as many bidding wars or multiple offers, but it does vary by neighborhood. So let's take a look at some of our local markets, starting with Westchester. So Westchester, you look at the total inventory, it's 71% higher than it was last year. Part of it is houses are sitting on the market longer, but still 70 over 41. Total sales, though, are down 40%. Still a great area to invest in. If you look at the numbers, it's up 15%. Again, medium days on market is 17, so 31% above what it was last year. And the median price per square feet, almost the same, but 5% up. If you look at Playa Vista, now that's a little bit different. So there's less inventory, 15 over 28, so 46% down. Total sales are down 44%. The median sales price, though, is quite a bit higher. And part of these numbers you always have to look at, is it condos, is it houses, what's selling? But really overall it's showing 102% higher. Median days on market is 23 over 13, and the median price per square feet is actually lower. So it's down 8%, even though the median sales price is up 102%. The next one is Playa del Rey. So as you can see, this one is also lower, 23 over 50 from 2021, so down 54%. Total sales minus 40% from last year, so 9. The median sales price is higher, up 14%. Median days on market is actually a little bit less than it was last year, and the price per square foot is higher, $762 over the $694 from November of last year. Finally, we have Culver City. So for Culver City, it's kind of on par, 3% less. Total sales are 37% down, so 29 over 46. The median sales price in this case is lower, so it's 27% lower. Median days on market is longer, 20 as opposed to the 11 that it was in November 2021. And the median price per square feet is also lower, 6%. So now I'd like to give you a brief overview of the neighborhood websites that I manage, specifically focusing on Culver City. With these platforms, you can find all sorts of great local information, including interviews with local businesses, school information, and upcoming events. You can access these websites through my link tree in the description. If you would like more detailed information about the market or other neighborhoods, don't hesitate to give me a call. Have a wonderful holiday, and we'll see you next year.